Yeah, I'm about to start here in probably like 3 minutes.
Okay, cool, cool. Who all we have on the line so far?
This is Wallace Ferragamo speaking. I'm using Dwayne account.
Okay, cool.
Let me see. Can y'all see the whiteboard?
That's blank. What y'all put? Start video?
No, it's a white screen, right? All right. Y'all can see me drawing and stuff on it. All right, cool. Yeah, I ain't gonna take up too much of y'all's time tonight, guys. It's probably about like a 30-minute, 45-minute session. But what it's going to be covering, like I'm gonna record it and things like that as well, because like it's going to basically teach you all what we're looking for on these retracements and what we're looking for when we're looking to enter off of these retracements and things like that, and how to target. So it's just going to be basically like covering market structure and so forth. So we'll give it about 2 more minutes, and I'm gonna go ahead and just jump right into it. What's up, Wayne Gang?
What up, Doug?
And you got it.
You up here on my dog?
Oh, about to do the webinar with the team, man.
Okay.
How's your Thanksgiving?
That's good.
Man,
Got a fan on them, you already know.
my third, fourth one, man. I'm tired of
Hey, man,
it.
shit, y'all ass about sleeping good, though, I hear that.
Yeah, real sleepy off the turkey.
Good, sleeping good, dog. That's about to do a webinar, I'm about to do a deck profile. Get the thing over there. Roll that up.
I know that's right. Let me see. All right.
Yeah, thanks for watching.
We'll go ahead and get started. It's gonna be recorded. All right. So, do you guys understand how the market moves as far as like moving in waves and things like that? Okay. Okay. So, when the markets move, it's making or trending or making its actual move. It moves in actual waves. Okay. So you'll see it do something like this. All right. Um, from this point to this point, that's one move. Here's your retracement. Okay. From this point to this point, that's another move. And here's your retracement. All right. And then here's your last move to the high. So as you notice, this is an uptrend. All right. So what's happening is you have higher highs and higher lows that are being created. All right. And that's what's telling you that the market is still in an uptrend. So for instance, if you see this move right here and then a nice strong bullish run up, but you see like a choppy retracement against this move right here, you have to understand that that's more than likely only a retracement until price gets up to this high and fails again. Now that's what's key, okay? So as you notice, here's your low, here's your high, here's your lower high in comparison to this. All right? Here's your lower high in comparison to this lower high. All right? And if you drew your trend line, that's what you're seeing. Does that make sense? All right, cool, cool, cool. So that's what helps you identify an uptrend. Now, here's the thing on an uptrend, what we're looking for is for these highs that are initially set to be broken or to be tested, okay? So you have to understand that even though you might see a nice steep retracement or a nice steep downtrend, understand that this initial high is going to have a nice strong movement push up to retest it. And if price breaks above that high and closes above that high, you're still on that valid uptrend basically. All right. Um, and once price does break structure, guys, what happens is you'll see it retest or retrace to test that structure point and find support at it. And that's how it validates that price structure, okay? And I'm going to show you all this on the charts as well. Real quick. So let me start that over real quick. Alright, so here's our uptrend. Alright, that's usually what it looks like. Typically you have one push up, a steep retracement, a second strong push, almost diagonal retracement, and another third push up, okay? In Elliott wave, that's 5 waves, okay? This would be push wave 1, this retracement's wave 2, this strong push up right here is wave 3, this sideways movement is wave 4, and this last push up is wave 5, okay? Once you see, 1, 2, 3 pushes towards a direction, you'll have a steep retracement, okay? And typically what happens is on these retracements, it's an ABC correction pattern more times than not, which it would come down something like that, okay? And if you notice, this is a lightning bolt harmonic pattern, but what I want to show you is from this low to this high is all one push. Okay? So when we're waiting or when we're looking to enter the market, if we see this as the momentum is a bullish run, but the market right now is bearish, we're actually waiting, okay, until we see the market complete its ABC move down at a retracement level. So what we would do is fill from this low to this high, and this retracement is what we're actually measuring, okay? So what you want to look for is, I'll draw a couple lines to you. So the first retracement level, as we know, would be like the 382. After that is the 681. After that would be like the 786. And then finally would be like the 886. Anything below that is your stop loss. Okay? But with these different retracements, they have different. What's going on, Dre? Oh yeah, I'm gonna write them. This is recorded as well. 786, and then this is the 886. Okay, so depending on how this retracement, depending on how it's reacting to this move right here, it's going to have certain characteristics that's going to let you know basically what possibility as far as an entry on off of these fib levels. Okay, now the first fib level of, or the first fib retracement of the 382, that usually has like a very quick, fast, like 2-3 candle pushes of momentum. Okay, it's very steep and quick and fast, and if it rejects off the 382, it's usually with some kind of previous structure, and this next buy move is going to be huge. It's going to be real quick and aggressive. Okay, if it bounces off the 681, it's going to be slightly slower than the 382. And if it bounces off the 786 or the 886, then those are typically real choppy, slow moves up. All right. So what we're looking for, like I said, is for the price to complete its retracements between one of these levels. Usually I'll use like a pending order, and then take profit would be this first high up here. After that, you're going to use a fib extension of either the 127 or the 1618. But the thing is, you're catching this whole move right here, primarily. and that could be a lot of pips actually. Okay. Now let me erase this. Now let's say for instance you get in on your buy order, right? And it goes to the high, but it fails that high. What we're looking for then in that scenario, let me draw this real quick. All right. So on this retracement, for it to be a trend reversal, it's got to break this structure and this structure. Okay. So what happens is you'll see it come down, find support, which that's what we want because we're still bullish buyers in this scenario. Okay. We're still bullish buyers. But for it to be a bearish or a trend reversal, you're going to see it come down, test structure, come back up, fail at this high. Now, when it fails at that high, it could pin up here. It could actually close a little bit up above it. But if it does close up above it, those next couple of candles are going to hit you right back into this same zone or this same level. All right? To where it makes you a bearish or a seller in that environment. Because what's going to happen is this next push down is now going to test this low, which is this structure, yeah, and break through it and find support at this next level before bouncing up and finding this old support as resistance. Does that make sense? And then once it finds that resistance, it's going to break through and keep going down. And that's really how the market works. Let me show you all on the chart real quick. If you got a question, ask it. Go ahead.
Like typically when it's going up, say for instance we in the buy process.
Right.
When it gets into consolidation,
Mm-hmm.
does it normally mean it's going down? Like whatever goes up normally comes down, and if it's going down, it's going to come up after consolidation. That's kind of what I'm seeing.
Correct. I'm gonna show you on the chart. I'm gonna answer your question. Let me see. Can you all see my screen?
Yes.
All right, cool. Let me go to the 4 hour real quick. Actually, no, I'll go to the 1 hour. All right. So I'm gonna show you all something on this chart right here. Give me just a second. Okay, so check it. From this low to this high, I'm going to mark up all these impulse moves and show you what the market does.
Okay.
All right. So from this low right here, you've got to rally up. All right. I'm gonna mark it. That's your rally. Let me get thicker. This is your rally up. Okay. When the market is changing, I would say the trend, whether it's temporarily or whether it's for the long term, the first wave is typically real choppy, and it still has a little bit of bearish momentum into it. So that's why this retracement is usually deep or steep into this first push. Okay, but notice it's coming down to retest this low right here. And if you see like the wicks and the pullbacks from this low, you're gonna know that you're in another buy situation, because guess what? From here to here is the next push. Okay, after that push, you have another retracement that finds support at the old levels, at the old resistance. So here's the breakthrough of this high right here. Here's a retest to it that finds it as support. Let me draw that out for you. Can y'all see that? All right. So let me continue to draw it real quick for you all. From this retracement, you see it is actually kind of moving sideways. It's within the range actually. You've got this push, retracement. This I wouldn't necessarily count as another push because it's this because of this right here actually. It slammed it right back into that same zone. Never broke this support. Ne- Never broke that high for real. Okay. Oh, I got you. Hold on. Y'all can still hear me? Of course. Yeah. All right. Cool. Boom. So when you're looking for, if you know you're in a bullish environment and you're looking for your entries, you're only going to be looking for your buys only. Okay. And since we know that the retracements are retracements of the bullish moves, like I said, we look to enter in between the 618 and the 886. Now let me pull up these retracements real quick. This low right here probably came in at the 786 from this low to this high. That wick is right there at the 786. Okay. Let's do the next one. From this low to this high. It's right with structure, right at your 50% retracement. You would still be valid for your buy. Boom. Comes down, tests it first time, shoots up. Second test, shoots away again. Third test, it gets the hell out of there. All right. So then from this low to this high would be your next bull move. So once you see it set the high, you let the market retrace. Let the market retrace. Grab your fib tool and fib from the low to the high and be looking for your next buy opportunity. This retracement came right in at the 618. Here's your retest to it. It got out of there. So on a move like this, you can either do it from this low to this high or this low to this high. I typically use the second low, and I look for the retracement. This retracement was real long and sideways. It's still a bullish market, guys. Even if you see it failing this high, let me say for instance, let's move that. If this is all we see, guys, like this, it's still a bullish environment until this low or till this structure, this monthly high right here, this monthly key level gets broken basically. As long as price is closing up above it, you're still bullish. Yeah, sure, it can come down and retest it, but price is still closing up above. And you see, here's the fake to the low before getting the hell out of there again. So what I would do again is fib from this low, let it go to its high. And find the retracement. This retracement looks about the 3812. The 382. And that's exactly where it is before this last push. Now notice this last push though, the momentum of these pushes, guys, okay? They're dwindling down basically. So if you know that price is dwindling down, now you can look for, if you have any kind of indicators, your divergence on your MACD, your RSI, your stochastic, which divergence is, a sell divergence is you have a high, initially high, and then a lower high on your oscillator indicator. But on the market, you've got your initial high and then a higher high. Okay, this is called bearish divergence. Okay, so basically you're going to be looking for your opportunity to, starting to short the market. And if you're using like your moving averages, you're not really going to short the market until if you drew your trend line from this low to this low and kept going until price broke structure of this low and crossed below your trend line and your moving averages crossed down below. Does that make sense? All right, cool. Hold on just a second.
Well, I feel like this card could be busted with that new other trap card.
All right. So, let's see. What kind of questions y'all got so far? What's going on? Yeah.
Okay, would you normally do this on the 1 hour chart?
You can actually do this on any chart, but there's a process to what I use it. Let's say if I'm just for this sake or whatever. Let's say if I'm intraday trading, the charts I'm doing this on, guys, I'm starting on the 4 hour. All right. And I'm looking for like the main trend. Clearly right here it's a bullish trend. But so we're looking for buys anyways, okay? Let me get some of these drawing tools off. Alright. So we're looking for buys anyway because our moving averages, that's the way they're crossing for one. The momentum on your sales have been limited so far on this. Okay, for two. And we bounced off some structure, which was the monthly key level. So you're still bullish. I've got this key level marked because like it's on the daily. It's a nice area to actually have watched because there's a little small gap over here. And if price, like I said, gets above there, like it's wanting to do, this high, guys, is going to be tested over here before any kind of drop. Alright, now this structure point right here could be the last tipping point of it, but like I said, this high is going to be tested before the drop, I expect it. Unless it fails when market opens this week where it's currently at, because that would be the 382 of this move down, I believe. Let's see. Well, actually, that's the 50. So if it fails again, you've got 1, 2, 3 taps to this 50 with some structure. So you would, of course, get in short. But that help you out a little bit? All right, cool. Now, like I said, intraday trading, you can do this on the daily chart. I mean, the 4 hour chart starting out. What is this? And like I said, first you want to find out, what is the trend for the day, or what is the trend for the time frame that you're going to be trading for. For instance, if you're going to be intraday trading, like those trades are going to be held, for 2 to 4 hours max. Basically, as long as this 4 hour candle is open, or maybe the next, the 1 or 2 4 hour candles, basically. So like I said, figure out the main trend, come down to the 1 hour, do some chart markups, mark up some key levels, or if you don't have a marked up or anything like that, draw your trend lines on the 1 hour and things like that. And let's say if you're looking for a buy and the 1 hour is showing the retracement, mark up your fibs on the 1 hour. For instance, on this move right here, you can mark up your fibs on the 1 hour, and I'm going to show you guys something. If you drop down to the 15-minute chart, you can look for your entry. Because the 15-minute chart is going to tell you something totally different from the 1 hour. Alright? So on the 15-minute chart, here's the retracement. Here's the shift of momentum, and now you have these tests to it that didn't cross below. I believe this is the 50 or the 382. Yes, the 50. So along with that, though, look what you have over here: a structure point of a high that was never, or that was broken, but not really tested too much until over here. You've got this move up And this is just a retracement within this move, so that's still telling you, you know, you're still on the long side because this high hasn't been tested for real, and not until over here, and it broke through. And now it came back into that same zone as I was telling you all earlier. It's finding some resistance, but we don't know for sure until the market opens tomorrow. To help you out. Good, good. That's what I needed to hear. Yeah, it is. I'm trying to tell you. So yeah, we'll be doing like these little teaching webinars every Saturday, or I'll be putting out a video every Saturday, whether it's recorded or whether it's live, for you all to, you know, to basically educate you guys on Forex and help take your all's trading to the next level, basically. Because I do know understanding what it is we're actually looking for as far as, you know, with these retracements, with the trends and the Fibonacci, like all those really tie in and what we're looking for. And like I said, each of these retracements levels, they have their own speed of a move. Let me see if I can actually find something to show you what I mean. As far as doing your chart work and stuff like that, yes. I like it because it's cleaner and you've got all these different tools that, you know, really come in actually kind of handy. Plus, I just like how the chart is on there. Let's see. From this low to this high is, I believe, a 382 or a 50, maybe even a 618. But okay, it's a 50. Notice once it found support at the 50, notice how this move is. It's pretty strong. Had this retraced deeper into like the 618 or the 786, this move would have been slower and happened in multiple waves. Okay? The market moves in a 8-wave cycle. And what I mean by that, let me go back to my draw board. Alright. Y'all see this picture right here? Alright, I'm going to show you all the waves. Ernie Johnson with Big Diesel, Shaquille O'Neal, and the Jet. Tonight we'll see the Boston Celtics. All right, from here, different color. Checking out the 76ers. From this low to this low is wave 1. From this high to this low, the retracement is wave 2. From this low to this high is wave 3. From this high to this low in that retracement is considered wave 4. From the low of wave 4 to this high is wave 5. Those make up one wave as far as Elliott wave, okay? This is what I'm teaching you guys. Alright? From this high to this low would be the retracement letter A. From this low to this high is B, and from this high to this low is C, which is 1, 2, 3. If you add all those up from this 1 to this 5 and this 3 move down, that's 8 moves, okay? And that makes up one wave of Elliott. I mean one cycle, I'm sorry. Let me erase that. Each individual legs or impulses are waves. The whole eight count is the actual cycle. Does that help y'all see like the waves a little bit? All right, great. Now, Along with Elliott Wave, there's some key things that you all can look for. There's a printout that I'll give you all, or yeah, I'll email it or send it in the group or whatever. Because on these retracements, there's also characteristics or guidelines that stand true. For instance, if you notice, Wave 2 was a steep retracement. Wave 4 is going to be more sideways or more flat. All right. So basically, Wave 2 is is retracing in between the 618 and the 886. Wave 4 should find no deeper than the 50 percentile. All right. But if Wave 2 is finding support at the 50 percentile and above, then Wave 4 is going to be the steep retracement. That's called the guideline of alternation. And that's all part of Elliott Wave and things like that. And that's another thing which I kind of look for when I'm looking to enter the market and understanding what the market is doing and where the market is at within a cycle. Because that's also going to help you learn where to TP at and things like that as well. Okay? Does that make sense for you? Just a little bit? Oh, man. Here you go. Oh, you icy. All right. Y'all got any questions? What's going on, Dre?
I know they went over this in like some of the videos on in the IML Academy,
Yeah.
but how would you typically like start going into the market? Like what would you look for? I know you look for like the trend lines and the pullback and things like that. But generally, if you're just going into the market, like
That's a good thing. So I'm gonna actually go over exactly what I do step by step for you guys, okay? Um, let me see. Let me go to a fresh chart. Damn. Look at this markup. That was a good one right there. Yeah, let's mark this up. Okay. I like marking this one up. Let's see. All right. So when I'm coming to like a fresh chart that I've never marked up and I'm looking to trade or I'm looking at somebody's analysis, first thing I'm doing is I'm marking up my key levels. All right. And I always start with the monthly chart. Now, depending on the pair, you're going to mark up a 1,000 pip range. On USD CHF, I'm going to do a 1,000 pip range, starting from the lowest low or the highest high, depending on which one was recent. All right, so since this is the lowest low, this is where I'm going to start from. And notice this is right around the price level of 70 cents, okay? So I'm just going to go to like the tip of this wick and then put it right around 71 cents even, okay? Let me get my template. And when I'm starting from the monthly, I usually delineate this key level with a red line. Of course, I've got it labeled over here as monthly as well. And since now we have that first level marked, I'm going to add basically 10 cents to 71, and that's going to give me my 1,000 pips. So from 71 to 81. And when I'm putting these levels on here, what I'm looking for is to see how price reacted around it. All right. Now, there's not too much data you can really go off of on the monthly chart, depending on where the price is at. So you're going to just have to, just do your best in a scenario like this. Let's see, and mark up just a few different levels. So from 81, you can do 91. And what you want to do is have 3 zones created. Typically, 3 zones. That's a nice level. Notice how price was a support, broke through, tested as a resistance, came through, tested as another resistance, and it's still closing below. So that's what we want to see. Notice that this low also hasn't been tested as well. So where the price is at on this one already, I'm going to tell you that it's at a crucial point, because if it breaks above it, you got a lot of upside to go to. But if it stays rejected, then you're going to see this low right here tested. So now we've got these three zones, I'm going to do one more. And let's see, the 111. There we go. And when I'm doing my key levels like this, guys, like I said, I'm looking for price action around them to see if it was, as a support level, as a resistance level, and things like that. Alrighty. Let's see. So now that we've got those created, I'm going to cut those in half, basically. And use a yellow line and create two 500 pip zones. So between the 111 and the 101, I'm going to do 106. And again, I'm looking for price to basically use that line or use that level, that price level, as either support or resistance to kind of validate it. What is that? 106, 96. It's a nice level. 86. And the good thing again about these levels is once you have them marked up on that chart, you don't have to move them or mark them up again until price breaks up and creates a new zone, basically. So all this above here, once price gets above this line right here, I would create a new zone. Or once price got below this line, I would create a new zone. And that's really all I'm doing on the monthly chart. From there, I'm going to jump down to the daily chart. Zoom out just a little bit. And I'm going to mark up any kind of key levels that I can see as far as on the daily chart. Now, the daily chart, you're going to use another horizontal line, but understand that these key levels, the way these levels work, your monthly is the strongest, your weekly is the second strongest, your daily would be the third. And what I'm looking for is on this downtrend, I'm marking the lows where it met a floor or hit a floor. So from right here, it bounced up, another test, bounced up, another test, bounced up, and finally broke through. Okay, so that's a nice little point. If you can't really see the levels on the daily chart with the candles, go to a line chart and you'll see it. Okay. Alright, so I'm gonna mark up that level. And that's the only level that I'm really gonna mess with right now, okay? So basically now that I've marked up those lines, what I'm looking for now is over here to see where price is at, what price is doing, and things like that, okay? Another thing is that you're using the MACD or the Stoic. I'm looking for the trend direction of that. So right now, just by looking at it, I can already tell you that we're in a retracement of this level right here, or this leg right here, okay? So since we're in a bearish retracement, this is on the daily chart, I'm still going to be looking to, go short. Because again, this is on the daily chart, and this move can potentially go all the way to this low, so you're still going to be short anyways. If you were like doing this intraday though, I would wait on this move and then enter in long instead of doing it short. But since we're on the daily, we're swing trading. Momentum is still short. Go to your 4-hour chart. Now things get a little bit good. So here you can look for, price action and market structure as far as where the price is at in relation to market structure, okay? So right now it's at a nice structure point where you can say it might be at some support. Okay. What you can do, fib from this low to your high and see where it's at. Right now it's at the 382, which is at some a nice structure point, but going from the day chart, remember we still have this very bearish actually. All right, everything is still saying bearish. So you're not going to take that long off of that retracement level. This looks like it's going to be a deeper retracement as far as somewhere between at least the 618, which would be at the top of this structure right here and all this mess right here, which is, I like that a little bit better. So just knowing that alone, if we're looking for the shorts, what I'm going to do is on this move right here or in this move right here, I'm going to look for the pullback, because on this move right here, the pullbacks are going to be subtle. They're going to be something like this. Okay, so what I would do is then fib from this low to whichever the next available, from this high to the next available low, and let the market retrace into these levels right here. Okay. And once it retraces into our key levels, which is in between the 618 and the 886, which is again with structure, you short it to go test this low down here. Here's your extension points. Okay, so what happens is you catch on the short, even though we're in a retracement. Let's say if you get in at the 886, there's my first TP. Stop loss you can put at the 886 or the 1, whatever suits your risk to reward ratio basically. And on this trade, it's almost a 3-to-1 risk to reward. Anything above a 2 is fantastic basically. Okay, so you gain what, 140 pips on this move, and that's just on a short retracement. Because honestly, we're waiting for it to hit probably at this weekly level, which is going to test. Because if you notice over here, yeah, that's a test. But even from this test or this move right here, it's got to come down and do a nice hard run into the retracement of that move, which that's a nice key level for it to find support at. All right. Now, since we're looking for that, now let's say I'm gonna show you all the ideal scenario or a nice scenario with this move right here. Let's see. Now let's say, okay. So let's say we're looking at this retracement right here. We're seeing the bearish momentum and things like that. What I do, like I said, you can fib from this low, from this high to this low. And this is basically what I'm going to be doing when the market opens, fibbing from the high to the low. No. Letting price retrace into one of our fib levels, met with some kind of structure. Here's a floor that was now became a ceiling right over here. And here's your short opportunity. It gave you a couple of different short opportunities. Here's your first one, came up, retested, and then it got out of there. And again, like I said, your first TP is this extension of the 1272. So this is what I'm going to be doing basically from this high to this low, or whenever the market opens, letting the market retrace into one of our fib levels met with some kind of market structure. Look for my indicators or whatever if I'm going to be using them, and then short it again. You can also, like I said, basically what I'm doing is gathering confluence. You can do your trend line and all kinds of stuff. And then once you see, it retrace and gets met with the 618 or this weekly level, you're going to be looking for your buys again. But other than that, that's really all I think for the most part we do. You got any questions? Cool. Let's see. Well, I think that's really all I want to go over is show you all some market structure tips and your fib tips and things like that. This is recorded. Like I said, I'm going to be putting this up tonight. Um, I'll type up some stuff to go with this as well, as far as like the retracement levels and how the price reacts to them and what kind of move to look for off of the retracement from the different levels and things like that. But other than that, I think that's it for tonight, guys. No problem. I can answer questions though. What's up? I've got 9 and 18. Yeah, but I use exponential moving averages. So I use EMAs. Let's see. Any other questions? Well, let me check this chat real quick. Uh-oh. Yep. Okay, yeah, that's at my spot. It's a little bit. Wow. All right, guys. Well, if there's no more questions, we'll end this one right here. I'll get this video up and posted and out to you guys. Alrighty. All right, now y'all have a good night.